And hello there, this is Akhil and Mitesh from our mortgage broker. It's been a while since we've been on. I guess we've been busy traveling and trying to keep up to date with all the interest rate changes. But anyway, so as I said, my name is Akhil from our mortgage broker, and I'm here today with Mitesh, who's one of our leading specialist mortgage advisors here at OMB. Mitesh, welcome and welcome back. It's been a while since we've done our last video.
It's been a while, Akhil. I think it's been almost 3 months.
3 months, okay, yeah. Okay. So let's give our viewers what they've been asking for.
Sure.
Let's share some insightful news, and I've got some questions for you. So I'm looking forward to putting you on edge here. So for the viewers out there that are watching us for the first time, OMB are a specialist mortgage and protection brokerage. We have 2 offices, one based in Bracknell in Berkshire and one in Mayfair in London. We are a team of 10 specialized and qualified advisors. We specialize in all types of mortgages and property finance to helping first-time buyers acquire their first homes, buy-to-let landlords and seasoned investors to acquire further properties in their portfolios, and also commercial finance, including bridging and development finance. The market at the moment is very, very nervous, on edge. It's fully debatable where the market is heading. So I'm going to move on to the first question, and Mitesh, be ready.
Sure.
So the first question, how has the last 3 months been for you?
To be honest, the last 3 months have been extremely busy. I decided in the last 3 months that I'm going to plan my diary in such a way that I can help my clients and inquiries coming in, but at the same time, spend some time in my diary to go and visit some clients that are not very local to me. So in the last 3 months, I have a lot of existing clients that have come back with their mortgage renewals. So they'll be looking at refinancing their portfolio, looking at some very quirky deals in the market, considering bridging finance out of things, and lots of risky deals as well. So when I say risky deals, as in deals where they know that the profit margins are a bit squeezed, but at the same time there might be a lot of capital growth, and because of interest rates being so high, which is why I mentioned about the squeeze on the profits. But the outlook for the future for them looks pretty good. And on the other side, I decided to go and visit some clients in Wales, in the Midlands, and 2 days ago I was in Peterborough.
Lovely. And it's good to see that, as mortgage advisors, we're not order takers. We're actually here for the long term for our clients. And it's good to see that you're making time to go and see these clients. And, you're traveling between up to 300 miles each way. So it's good that you're doing that. And for us, for the viewers out there, we're not just an average mortgage brokerage. We're here to support our clients, build those relationships, go and see them at sites that they're building and developing and converting, as well as going to see them on a social basis as well. So that's really, really good news from that side. So kudos to you there. August is always a bit of a sticky, quieter month because people are traveling, school holidays and the alike. So it's a good time for us as business leaders and as advisors to sort of plan the next, the last third of the year and how we see out 2023. So well done to you on that side. What kinds of inquiries have you recently been receiving?
So I've been quite surprised with the type of inquiries I've seen in the last 3 months. I've had, for some reason, and this has been in line with discussions I've had with the lenders that I speak to on a regular basis, there's been an uptake on a bridge exit inquiries a lot. What I mean by that is clients have taken bridge finance, done a development, and then now they're looking to exit out and get a buy-to-let loan. So the feedback I'm having from lenders as well is that clients don't want to sell in this market. They rather retain the property and then basically exit out of the bridge and get a buy-to-let mortgage. So I'm getting a lot of inquiries around bridge exits. At the same time, I'm also getting a lot of inquiries about new bridge purchases, transactions. So clients are looking at buying something that's run down. They're looking at a semi-commercial, something a commercial with flats above, and maybe potentially looking at splitting titles further down the line. And so there's a huge uptake on that. On the other side, I'm also seeing clients where they're looking at high value properties. So moving houses, either moving from one house to the next, selling and buying, and then upgrading to a high value property. So I'm also seeing a bit of that as well. Amongst all this, I'm also seeing an influx of inquiries around the second charge market.
Okay.
Because if you logically think about it, clients that don't want to go down the bridging route and the stack for finance will look at options for second charge lending to bridge the gap in terms of shortage in the funding. So it's to do with the refurbishment project, but it's to do with looking at buying something, they're showing on 50 grand, 60 grand here. So they're considering the second charge market as well.
Okay.
So that's kind of where the bulk of the inquiries are right now.
Okay. So just to reiterate, it's bridging loans for new acquisitions.
Yeah.
It's the bridging exits, so more buy-to-let and term facilities for the exiting on those developments. And you're seeing a bit more influx around the second charges because of the shortfall in maybe rent yields or a second charge to finish off the development and the alike. Okay, just a quick one there around the bridge exit. If somebody did want that buy-to-let exit strategy, how soon should they be looking at it? So let's imagine that on the first intention was to sell those 6 apartments, for example.
Yeah.
But now because the market changes, interest rate changes, they've now seen, you know what, we actually want to retain these properties for a profit.
Yeah.
How soon should someone contact you to get that buy-to-let underway, talk to you about rates and fees and terms?
It's a very good question. So I get a lot of inquiries where somebody will buy something, let's say a unit in cash.
Yeah.
Because they have the funds to do it. Then they may have the cash to spend 20, 30,000, do a bit of refurbishment, and then try and get the money out. Now, there's very few lenders in the market that look at day one remortgages on the open market value.
Yeah.
Now, for the sake of getting more options in terms of more lenders who look at open market valuation, I would suggest if you've taken a standard 12-month bridge finance, then do your works, make sure everything is neat and tidy in terms of the spec, nothing is outstanding.
Yeah.
Especially when you get to the legal stage, the solicitors are not chasing for things for the lender. And then maybe on month 5 to 6, approach the broker and start the process, because you want the value to go in straight after month 6, so the lender can then look at open market valuation. Good.
So the sooner the better, but start talking to the likes of yourselves to start knowing where the market is, where the rental stress tests are, and also in timing for the making sure the property is wind and watertight and it's fit for valuation purposes. Great. Thank you very much. Next question. We talked a bit about the bridging loan market there. Tell us about bridging loan market. What's its current situation? Are those interest rates going up? What are the lenders doing in this space?
So it's been a funny time, I would say, in the last 3 months. I've seen rates that have sort of gone as low as 0.75 to 0.8% per month, which has been quite attractive.
Yeah.
The other main big attraction with bridging is that the bridging products normally have lower product fees compared to, let's say, the buy-to-let market these days.
Yeah.
So the standard bridging product fees are 2%, which gets added to the loan. Now, because most of these lenders allow you to exit out after 3 months, it looks like a very good deal on paper because of the fact that on average you're paying 5-6% overall, because by month 6 or 7 you're looking to exit out.
Okay.
Some clients are very cautious about not taking a high rate on the buy-to-let right now with a high product fee arrangement that the lender's charging, because they don't see the value in it right now. They rather hedge the bets for the next few months and see whether the market then shifts and maybe I can get a 0.5% lower rate. And so if you're in a position where you're trying to add value to a property, there's not a bad shout to look at a bridge finance option. Because it's a win-win for you. The rental yield at the end of the project will be higher. The value should be higher because you've added value to it. And then the stress test and the numbers you're looking at for max borrowing on the exit should be automatically higher because you've already added value to the property rather than buying it from day one where there's no value on it. And so in my eyes, what I've seen in the last 3 months is that the rates have been very attractive. There are some lenders offering some very good deals. We've had lenders in the market who offered automated valuations, which means the client's paying less than £26 on the same day. Within 3 days, they're getting terms issued on the deal without having much issues with the lender, the underwriting, quick process, and then the legals gets instructed.
Just a quick one there. So bridging, is for those viewers out there that are watching us and learning about bridging loans, you might have heard some huge horror stories. It's very expensive. I was burnt on the back end, and so on. Now, what I would say here is don't just speak to Dave at the pub. Speak to the specialist advisors that understand bridging. And we at OMB only work with about 6 or 7 bridging loan lenders. And the reason why we do that is because first and foremost, the relationship we've got with them. Number two is they don't change the goalposts on the 11th hour. And the other thing is we like to work with lenders that think commercially, especially when someone is paying between 0.5 and 1% per month. You want a lender that is thinking commercially and is actually on the same page as our investor client and our developers. So it's paramount that whoever you're dealing with or whatever lender that you're trying to obtain funding from, make sure that they've got your best interest at heart and they're not those lender sharks that want to repossess your property if you fall foul and default on your loans. That's very, very important. The other thing at the moment bridging lenders are doing, and I think you mentioned it, is valuation fees.
That's right.
Some are offering very, very competitive and very, very quirky incentives. Some are free.
Yeah.
Some are desktop valuations.
Right.
So let us shop around. We work very, very closely, as I said, with 6, 7 bridging loan lenders. But again, we have access to every single bridging loan lender in the market. So it's our job to find you the most competitive terms, but also someone that's on the same page and thinks commercially like you, which is a bit more important, which is good. Tell us a bit more about the buy-to-let market. So we talked about bridging loans there. Yeah. Buy-to-let.
Now, buy-to-let market has been very, very interesting because we've got so much choice of products out there.
Yeah.
They can get sometimes very, very difficult.
So it's good. So just quickly touching on that. You're saying there's a lot of options out there in the buy-to-let space, even in these uncertain times.
That's right.
So that's really, really healthy.
Yeah. So the reason I mentioned that is because the other day I had an inquiry from a client and they were looking at 80% lending on a buy-to-let. Now, because the property value was so low and the rental yield was pretty good, I could actually give them an 85% loan to value deal on the buy-to-let. So those are quite rare situations, I would say. But in locations around London and the outskirts, where clients are looking around 75% lending, we have lots of lenders that are offering different range of products with different range of fees.
Yeah.
So the range of fees can start anything from a flat fee structure, like a 1999 fee, let's say, all the way to 2, 3, 4, 5, 6% permanent fees.
And 7%.
And 7%.
There's a lender that's 7% as well, by the way.
Right,
So it is frightening, unfortunately. You know, during COVID and pre-COVID, I call it BC, before COVID times, there were traditionally it was 999 or 1999 or typically up to 2% arrangement fees.
That's right.
But we are now in August 2023 and there are up to 7% arrangement fees. Now, lenders are arguing that they have to increase the arrangement fee to help with the stress test, and I get that. Now, what we say to our clients and what you do and the rest of the team do is we look at the true cost over the term of the mortgage, factoring in actually the APR, the other cost, valuation, legal fees, and the arrangement fee. So when you and the team send out indicative quotes, you know, our clients are shocked. Like the fees are 10, 20, 50,000 pounds, which is very startling and it's frightening. However, we've got to work with the times that we're in. You know, fundamentally, the best time to buy property is always yesterday. Yeah. And the way and the property and the real profit is always gained on acquisition. Yeah. So, you know, we don't want to reinvent the wheel here. You know, buy in the right location, buy at the right price, and find ways you can add value to the property, right? So, you know, Mitesh is on hand. I'm going to drop you his contact details right now. So take a picture. That's his email address. That's his mobile number. He's available 12 to 12. I'm only kidding. What are you working now? Is it 12 to 3?
12 to 3:30.
12 to 3:30. No, all jokes aside, you can catch him during normal business working hours. But that's his email address. That's his mobile number there. So any questions, you know, even if you are just setting out in your journey, or even if you've got a mortgage coming up in the next 12 months or 18 months, get in touch with us. Speak to Mitesh. Let's start looking at what the options look like for you today, so you don't have a problem tomorrow. You know, you don't, fall off your chair in 10 months' time or 6 months' time. So start the conversation going now. So any questions, speak to Mitesh on his email and his mobile. So back to the questions.
Sure. Can I just add something on the buy-to-let side? So the interesting point that you mentioned about the high fees at 7% being so scary for the clients. I have seen a mindset shift in the last 4 weeks from our clients.
Good.
Where as soon as I mentioned the word 6%, 5%, 7% arrangement fees, they've accepted the fact that's where the market is. So I'm seeing clients where they're happy to go ahead purely on the basis that they're aware that by paying a high arrangement fees, they're getting a low interest rate, but at the same time, they're getting the maximum borrowing.
Yes.
And so the maximum borrowing is outweighing the higher product fees because there's really another option for them to get that maximum borrowing.
Yeah,
and that's what I want to add it on.
No, it's a very, very good point. So in essence, don't worry about the arrangement fee. Look at the loan size, look at the interest-only payments to the mortgage lender, and look at your rental income. Profit is profit.
Yeah.
So at the moment, especially in London and the home counties, the southeast, it's all about yield and capital growth, capital values, house prices will be seen, but it's more sort of medium to long term, sort of 5 to 10 year plus trajectory. Unless you're adding value to the property on day one, you're buying an end terrace 3-bed house, you're buying it on a bridging loan. You're adding value to it, adding rooms, adding dormers, extensions, and then you can add value on the back end. And there are lenders out there that could potentially bypass the bridge loan route and get you a buy-to-let mortgage with a light refurb as well. So it's not one rule fits all. I would say is let's have a real conversation, and you're really good at that. As long as you're really good at that and speaking to the client, and not everyone knows everything, and the market's changing, and I think lenders are adapting to change, and they're constantly asking us, what can we do different in the market?
Exactly.
How can we be a bit more appealing, efficient, and so on? So it's all about trends, and we're in the driver's seat because we're speaking to clients every single hour of the day.
Can you just touch on that again in terms of putting this into practice? So, in concept, as a concept, when you say, we can bypass a bridge product and then get a buy-to-let style product, which then allows you to bypass the bridge product and get the specialist buy-to-let product for your a deal which has refurbishment involved. Let's say it takes around 8 to 10 weeks to complete a light refurb on a property. What I'm also finding is that if you compare the normal market for a buy-to-let, let's say the rates are 5.25% to 5.5% with a 7% rental fee, hypothetically speaking. Those are products that allow you to bypass the bridge finance. Their rates will be 7+, even if the arrangement fee is less. So you do need to weigh out and see whether you're comfortable to lock in a 7+% product for duration 5 odd years to meet the stresses again, to get the max borrowing. Yes, at the outset, you're going to save monies on legals, valuation costs, convincing, all that. Very good on paper. But are you then comfortable going with a high rate of interest to basically bypass, bridging finance in order to sort of get that deal and the reassurance to say, well, at least I'm not spending a lot of money on these upfront costs. So that's the balance you need to sort of weigh out and think to yourself, which is why I guess a lot of my clients are thinking, I know that product, I'm going to go down the bridge route, exit after 3-6 months, and then by that time I'm going to get more money, and then at least I'm tracking myself 5+% interest rates on the buy-to-let side. And
I think with your buy-to-let hat on, as an investor hat on, you need to have that commercial mindset and looking at the pros and cons on every situation. Sometimes our clients need to put in more equity on day one. Some will reap the rewards at the back end. Some will reap the rewards on the front end. So it's all about doing your due diligence on every single site, every single opportunity. As they say, you've got to kiss a lot of frogs till you meet your prince. Same principle with property, right? You've got to do a lot of viewings, a lot of research to find the right deals. But again, speak to Mitesh about those scenarios. Let's look at the numbers. Let's really number crunch, because we're in the business of numbers, right? It's all about finance, and the numbers have got to add up. And you've got to look at yield, you've got to look at capital growth, and you've got to be realistic, I would say, especially in today's market, and have an A, B, and even a C plan at the moment as well. So please do that. So thank you for sharing that.
No problem.
Next question: valuation.
Oh, right.
Ooh, is there a downward trend? Is the market stable?
Yeah, there is a downward trend. I'll be honest with you.
Okay. 2
things here. One is where I'm finding remortgage transactions where the property is being downvalued by 10 to 15%.
Right.
But on the flip side, I'm finding a lot of my portfolio clients who are buying under market value transactions and utilizing the bridging product. So they're knocking off 30, 40, 50,000 asking price, So if somebody is buying a property, this is a win-win for them. But those who are remortgaging are finding themselves where the figures are 10-50% less than what they expected. And that's a common trend.
And are you finding, so, obviously we're a large team of mortgage brokers.
Yeah.
And to be honest, you mentioned 10-15%.
Yeah.
Is that more geographically in certain areas, or are you finding that across the whole board?
So far, in most of the transactions, it's been virtually 90% of what I've dealt with.
Right. And what are sort of those valued properties? Is it £1 million property pluses, or is it your bread and butter, £200,000-300,000 properties?
Bread and butter up to £500,000.
Right. And you're seeing a bit of a downward trend.
Yeah.
Okay, no, it's interesting because obviously I speak to Rick surveyors.
Yeah.
I speak to the other advisors.
Yeah.
I'm seeing what am I seeing? I'm seeing a slight decrease in house values,
right.
Predominantly those ones that are for remortgages.
Yeah.
And it's more regionally.
Right.
And I think anywhere in the southeast, anything sort of 750,000 or more, those are seeing a bit of negative press around the valuations, and also those properties in the HMO category as well.
Yeah.
Now, depending on when you bought the property, everyone says, "Oh, the house price has gone down." If you bought it in COVID, and you're asking for 2-year mortgages come up, the likelihood is that you might see a decrease in your valuation, especially if you haven't added to the value of the property, or the same. But if you bought a property in 2013, which was probably the last decade, that was the best time to buy a property, you would have seen a massive spike in those valuations. So, and I see a lot of newspaper articles and, headlines, house prices are dropping 10, 20, 30%. Well, my first question is, which areas? When did they acquire the property?
That's right.
Most of the people that bought property in the last 2 years or during COVID, either overpaid or they paid at the height of property prices.
Especially new build.
Yes. So you've got to factor in all these questions.
Yeah.
Everyone thinks their house is worth more than what it is. It's very human. It's a human trait. But just tread carefully, I would say, around the valuation. Be realistic. And for the viewers out there, if you are doing a remortgage, there's no harm in you being on site when the surveyor comes out there.
That's a good point.
You can talk them through what any changes you've made to the property, the material ones, what you've added value. Tell them about the area. Not every surveyor that comes and see those property are from within the same postcode area, right? So there's you don't want to be overburdening on the surveyor because they are the RIC surveyor. They've got a qualification, all that sort of stuff. But there's no harm in having a bit of a sales deck or a 60, 90-second conversation around how you've added value to it. But it's interesting. You said 10-15%. So listen, there is no right or wrong. But what I would say to the viewers out there is be realistic with your valuations when you are doing a remortgage application. Be realistic with the mortgage advisor.
Yeah.
Tell them why your house has gone up 100,000 in 12 months. It's because you've added value. If you look at Zoopla, they'll give you an estimate on your house valuation, but they won't know if you added 2 more bathrooms and 2 more bedrooms. Okay, so there's lots of things. Anything else you want to add?
I was about to say, if you're adding value to the property, make sure you keep your invoices.
Yes. It could be a business expense as well.
No, because the valuer might ask for it.
Yes.
Or the lender will ask for it.
Yes, and before and after pictures as well. So you're right, invoices, how much have you spent on it before and after pictures as well. And it's nice for your CV as well.
Very true.
All right, next question. Oh, we all love this one. So interest rate predictions. We've been talking about this for many, many years. I've got my views. The Guardian's got their own views. Bank of England have got their own views. What's your view, Mitesh?
I reckon there's another 0.5% lurking around.
Yeah.
For the rest of the year.
Is that upwards or downwards? Let's
upwards.
be upwards. Okay, I just want to be clear.
Upwards.
Yeah,
for sure. That's my prediction.
So we're going to head to 575.
I reckon by the end of the year.
Yeah, Christmas dinner time.
Possibly.
Yeah.
And then let's see, maybe a peak at 6 early in the year, maybe.
Yeah.
And then hopefully we'll level off slightly.
Yeah.
By spring.
Yeah. So new tax year, April-ish, we should start seeing interest rates come down. So listen, at the end of the day, everyone's got their own prediction hat on. Everyone is, everyone's got their own little crystal mazes. I'm going to throw in my prediction. I about 12 to 18 months ago, I predicted 5.5% by the end of 2023. We're definitely going to be there. I think the terminal rate will be 6%. I think we'll hit 6%. I think the reason why it would be, as I said, we'll peak at 6%. I think interest rates will start dropping off in Q3 next year, so Q3. So this time next year, I would say rates will start coming down, but they won't come down as quick as they've gone up. The other thing is inflation has got some way to come off yet. I know the data is quite positive at the moment, but the problem is wage rises are still very, very in line with inflation. Unemployment is super, super low, and the US market are probably predominantly doing quite well at the moment. So, you know, for those of you that think interest rates are going back to 1% and 2%, you know, don't hold your breath. Honestly, I may be wrong, and I would love them to go back to 1% and 2%. Who wouldn't? But realistically, the UK has always been in a 5% interest rate market. It's a common rate over the last 100 years. So, you know, when you're doing your stress test, when you're doing your analysis, factor in 5% as a best case. Worst case, 7%. What do you think about that?
I would say factor in 5.5.
Yeah.
And then 7 is the worst case.
Okay. Yeah. So 5.5 to 7, 5 to 7. Yeah. It is no harm in over-egging it and under-egging it as well. And be realistic as well.
Sure.
Good. Next question. What are the challenges you're facing currently? So you as an advisor, what are you facing?
So you've seen recently in the press where lenders started changing the rates suddenly when the market has been a bit quiet.
Yeah.
It's been sort of, let's say, in the last couple of weeks, there's been sudden shifts in the market. So what I've seen is, on one hand, I've seen lenders drop their rates slightly or provide a better range of products within the 2-year fixed rate range or 5-year fixed rate, again with higher product fees, lower product fees, higher rates, lower rates, so more choice. On the bridging side, what I've seen is lenders' rates have gone up for the last 4 or 5 weeks. So I know rates are hovering around the 0.85% mark to anything to 1.15. But I'm also saying that because of swap rates changing drastically week on week, that sudden transactions are having a slight impact on the deals. So the odd 0.05, 0.1% change on the heads of terms from lenders out of the blue, which is something that can be expected, especially depending on how those lenders are funded. So the biggest challenge I have is that if the lender is going through an internal change, then unfortunately the clients would get impacted. Otherwise, they would run out of business. And so that's, for me, the biggest challenge. The other biggest challenge I'm having alongside that is that I'm not getting clients quick enough to provide me all the documents for me to be ready to process the application for me to secure the rate, so that if they're wasting more than a week to 10 days analyzing a deal, by the time they come back to me, the rates have already changed.
And I think it's very, very important, especially in today's market. As you said, rates are changing every single minute of the day. For anybody that wants to buy property or refinance property, we're gonna need documents from you. You know, we need make sure your passport's valid, your driving license is valid, your bank statement's got your current address on it. If you're employed, we will need the latest 3 months pay slips, your P60 as well if you receive bonuses and commission. If you're self-employed, have your latest 2 years tax calculations on hand and your tax year overviews. They are your general standard documents we always need, and we will need those. So if we and Mitesh gets the admin out of the way, we can then concentrate on getting that application through the door, get the rate booked and secured, get any fees paid at the same time, and supply them with the documents. And then what that happens is that we can get on with dealing with the lender remotely behind the scenes, while you as the investor can then look at how you're going to enhance it. Perhaps you want to go out to the market and tender the deal for building, or you want to get onto your next deal. And also another document that we'd love to have on file, and we always encourage it, is if you own a bunch of properties, a schedule, a property schedule. And then what that means to you guys is Mitesh can look at that monthly, annually alongside you, make sure you're on the right deal and you're not going onto the standard variable rate because you forgot about the deal ending, or the bank didn't contact you, or your previous mortgage broker didn't contact you. So, you know, we take pride in doing that because we want to make sure that we get you the best deal at the right time, and we're more proactive rather than reactive. So documents, so it's a bit of an outburst, but make sure documents are there. Get them to us as soon as possible, because we can manage that. We can't manage much with the lender side.
That's right.
You know, we'll try to push our weight where we can. But it's very, very important that they do that. Good. I'm going to put Mitesh's contact details here once again. That's his email and telephone number. You guys are probably watching this on all our social media channels. Facebook, LinkedIn, Twitter, YouTube. Where else are we? Facebook, Instagram. God almighty, yeah. It's not called Twitter now, is it? It's called X.
Oh.
Yes, X. It's called X. So good on Elon there. So it's called X. So yeah, X. Forgive me, Elon, if you're watching this. Okay, good. So that's Mitesh's contact details. Last question. Any other news you want to share with us, Mitesh? Any final words for our viewers?
Well, whilst we've mentioned that some turmoil in the market with regards to high interest rates and change of rates, higher product fees, I'm also seeing that there's some brokerage companies out there that are winding down.
Yeah.
Certain networks that have been around have been taken over.
Yeah.
And so
we won't mention any names, but it's out there. Yeah.
It's out there. So that tells me that maybe business generally has slowed down in the last 6 months, I would say, in most practices. And so I think sometimes if the profitability is not there within the business, then I think sometimes you sort of have to sort of put your hand up and say, well, maybe we need to sort of look at other options and then cease trading. Yeah.
And I think it's a good point that you make there. I think for those advisors looking for their next broker, the next advisor, ask them about their compliance, ask them about their access to lenders, ask them what does an average deal time frame look like, how much documentation do you need from me, what's your sign-off procedure behind the scenes. So if you are dealing with an advisor that is an appointed representation of another network, that means they're not directly authorized. They don't manage their compliance in-house. They have to go to a third party who is basically their parent, if you like. So it's paramount, in today's world to deal with a directly authorized brokerage first and foremost, and make sure that that directly authorized brokerage has access to every single lender in the UK. And we're proud that we are directly authorized. We manage our own compliance in-house. We've got a great support system and systems within our business that we've formulated over the last 5 years. It's forever evolving, but for the better. Our team is growing as a business. And more importantly is we have direct access to those lenders. So, if you want to engage with an advisor in today's time, is ask them about the track record, ask them about the compliance. And if they're not directly authorized, you should question why they're not directly authorized. And does that slow down or does that become a hindrance in you, the investor's side, or someone that's trying to acquire a mortgage? Because what we are finding, as you quite rightly said, is some of the networks out there are now being bought out, or not fit for purpose anymore, and they are basically closing down the business. So it's paramount that as clients want to adopt new advisors, or even their existing, have a word with your advisor and ask them about the compliance, access to lenders. What's your compliance like? Have you any red flags? Have you been disqualified from any lenders? Because it's very, very important in today's day and age, and we take pride in that. As a business leader, that's my forte is systems, processes, compliance, and making sure the team are doing. We want to under promise and over deliver. That's our one of our ethoses, I should say. That's very good. So if you guys are watching this on Facebook, hopefully you've enjoyed the last 30 minutes or so of news updates, the summer update, and the outlook for the rest of 2023 with Mitesh and myself, Akhil. If anybody wants to reach out to Mitesh, once again, his email and telephone number is there. I'll leave our website here now for you guys as well. So you can contact us, book in a consultation, see what the company's about, see what services we offer at ourmortgagebroker.co.uk. Hopefully that's been useful. Hopefully we'll do another video, not in 3 months' time, but maybe in 3 weeks' time.
Well, I was just thinking you might do a video by end of September, early October, because one thing we've forgotten to mention is that we've already had 2 awards this year.
Oh, yes.
And we've been obviously nominated for a 3rd award.
Yeah.
And so you may want to share with the viewers what that 3rd award is all about.
Yes, thank you. And it's actually right in front of me here. I totally forgot. So the team were nominated for the Best Buy-to-Let Broker of the Year award in April by Business Money Facts. We were fortunate to be crowned the Best Buy-to-Let Broker of the Year award by Business Money Facts. We are also now shortlisted for the Best Broker of the Year for Consumer with the National Consumer Awards. The winner is going to be announced, I believe, in October of this year. So it's another event in London, one of the fancy hotels in London. So it's good, as a business, we are being nominated. We're winning awards, and that's because that's for two reasons. One, it's the team that we have in the business. So I'm thankful for everyone in the business, and more importantly, is our clients. Trusting us as a business, trusting our advisors to do the best for them. But as they say, you're already as good as your last deal or your last award. So this is great. It's amazing. It goes on the display stand. But we want to be doing more. We want to be doing more with our clients and showing our real worth. But all I would leave you guys with is, yes, it's challenging. Times are challenging out there. The team, it's not all hunky dory. It's busy. Sometimes it's quiet. Sometimes deals get cut back, or they get loan to value reduced, or interest rates go up, or the client can't find the deficit, and whatever, any other thousands of reasons why stuff doesn't go through. But what we do here is trying to find solutions. There's always going to be knockbacks, and anybody tells you you've got 100% strike rate, they are lying. So that's the only thing I would assure you is we'll do our best for you. There's no two ways about that. We're going to be fully accessible, fully available. As Mitesh said, he's been to Cornwall, he's been to, I don't know, where else? Peterborough.
No, I'm going to Cornwall.
Oh, sorry. Yes, and he's going there to eat fish and chips. So there's lots going on. So if you want to meet us face to face, or come and visit our offices, or come and visit you at your offices, please let us know. We're not just one trick ponies. We don't just do simple mortgages. We do everything. So whether you're you've got various income streams, so you're self-employed, you've got various income streams, you run many businesses, we should be one of your brokers that we should be talking to. If you've got a large portfolio of properties, whether it's commercial and residential, get in touch with us. Let us review those rates, those deals. And even if you're looking to acquire further assets, let's look at the deal. Let's look at the proposal that you're putting together. Share the information and data with us, and let us give you a bit of input from the financial side. Because you and I both know, we all should know, is finance is usually the largest cost in factoring the deal. We do our due diligence on any acquisition or even refinance. And last thing I will leave you with is, please make sure you do rent reviews. A lot of our clients don't do rent reviews on their buy-to-lets. So, if you've got a lovely client, they send you a box of chocolates every year for your birthday or whatever it is as a landlord, make sure you are doing those rent reviews, because most lenders will only lend on what you receive in your account. Even if the market rent is £1,000 per month and you're getting 700, the likelihood they're going to work with 700, because that's where the affordability lies. Don't get me wrong, there are a few lenders that will do an open market, but to reduce that stress and that level of conversation, part of the underwriting is do rent reviews. You're running a business here. You're not doing it for the fun of it. So rent reviews is one of my big tips I would give you guys. Today, August the 24th, 2023.
Shall I leave you with the final tip?
Go on then.
We've talked a lot about projects and a lot of large deals on the table. I'm dealing with right now 5 different transactions, all project related, probably worth in the region of 6-7 million, I think, overall, right? Put all the deals together. Just make sure that you have some contingency planning in place so that you don't run out of money.
Yes, contingency. A bit like my bank balance at the moment. Okay, guys, thank you so much. It's been a pleasure. Hopefully we'll see you in September again. If anybody has any questions on the back of this call, drop them down in all the social media links, and we'll look forward to supporting you guys in your journey. That's Akhil and Mitesh from Our Mortgage Broker. We'll see you in September. All the best.